we have Jörg, Goschin, and Markus Fuhrmann, who is the CEO and co-founder of GROPYUS. And this conversation is going to be moderated by Phil Kasumu from the team at Allocator One. So if you could put your hands together for our next speakers. Gentlemen.
Hello, everyone. Testing. 1 million, 2 million, 3 million. You know the joke. I saw Warren Buffett do that once, so. Guys, thanks for joining me today. So, very excited to be here. As Eliana mentioned, I work at Allocator One. I head up the London office, so very excited to be here today and carry on the discussion. So, the first topic, or the first question, is really focused on the evolution of venture capital. So, Jörg, with your extensive experience in public funding, how do you see venture capital evolving over the next 10 years? And are there any significant shifts to anticipate, either in venture capital or in other types of capital allocation?
Philip, yeah, thanks. Very good question, and I'm glad to be here. Thanks for the invitation to speak. The asset class venture capital, I think, is an asset class which is really set for further growth, tremendous growth, for various reasons. If you look at the investor side, I think we will see more investor groups, new investor groups shifting into the asset class, because venture capital as an asset class is an asset class which produces alpha, which has growth, intrinsic growth, and intrinsic growth, alpha is value creation, and so this is the reason for positive returns. Second, I venture capital is an asset class where, when we look at the products, it's in an early stage. Venture capital nowadays only functions via equity investments, and so venture debt is evolving, but we do not have much debt in that asset class. So I think we will have a perspective also for venture debt. And we have no secondaries, not a functioning secondary market yet, also GP-led. So I think the asset class venture capital from an investment perspective has a lot to offer. So this is a second strong reason why I believe this asset class will grow. And the third asset class, I think, is a fundamental one, or the third reason is a fundamental one. Venture capital, if you look at the assets themselves, the startups, the companies, they show much higher degree of professionalization, and the intellectual property they have is way better than like 10 years before or 20 years before. So I think the intrinsic value of the assets is much higher, and due to specialization, this will continue to evolve. So three strong reasons. And two other factors which really contribute to the growth of venture capital is the support from the government, from the governments. Not only, in Europe, we see it here in the UK, British Business Bank, BPI in France, KfW Capital in Germany, but also I just returned from the Gulf states. There is in Qatar, there's a lot of support for venture capital, but also in the United Arab Emirates, also if you go further east, Singapore and so on. So I think governments across the globe support the asset class venture capital strongly. So this is also driving the growth of this asset class.
Thank you. And Markus, as an operator turned VC, you've obviously raised a ton of capital over the years for delivery on your current business at the moment. How have you seen the landscape change over the years, and what challenges do you think operators will need to kind of take into consideration as they move forward?
Yeah, it's been a long journey, right? I started my first company in 2000, so I've been doing that now for almost 25 years. Seen the ups and downs, right? 2004, so the nuclear winter a little bit in terms of VC in Europe, when all the US guys left again after that wasn't so great. And I'm an Austrian, right? So the Germans are conservative, but we might be in some kind of risk allocation even more conservative. So we at least we're winning there, right? In terms of being risk averse. So that's another thing. But what I've seen is, there's a much more, I would say, professionalism now in the market. There's much more capital, especially in the earlier stages for companies, right? So the venture A, B, and a little bit growth capital is also fine right now. I mean, it's nothing compared to the US, but it's getting much better. There's almost nothing there for really big bets. So for things that are visionary, industry changing, not that easy. So I would say that's something where we need a change. I hope it's not too late, but positive thinking, I think it's still time, but that's something we really have to catch up quickly. And we see, of course, now a lot of more, I would say, industry-specific know-how, right? And this is also why I'm happy, to invest in Allocator 1 and know Felix for a long time. It's really, the difference is you have people allocating funds that really know the industry they're in. And I don't want to step on anybody's toes, but it's not just consultants anymore, or bankers, or people that basically get handed some checks from some people that need to allocate them. Not that they are not important either, but I think it's very important that you have people that really have been on the ground, that understand the technology they're investing into. And it's not just a herd following one scooter company after the other. And that's basically what has been happening, right, in Europe for a long time, Excel sheet investments, right? Like everybody could have done, it looks nice, let's do a little bit more profit, maybe hopefully later the customer acquisition goes down a little, and the customer lifetime value goes up, and if you change this here to 30% instead of 20, we're an IPO company in 4 years, right?
I think you're making a few people nervous in the audience with this.
So that, I started, I helped to start two venture funds, and we also do investments like that, right? But I think it's very important that we look much more at industry-changing things from a competitiveness of Europe, and not just from making returns. And you make returns if you bet on the right things that can be really big, right? So that's what I truly believe.
And obviously you've had incredible success scaling Delivery Hero and GROPYUS. So what have been some of the biggest lessons you've learned over the years from, I guess, interactions with VCs, and how can the relationship with VCs and founders improve?
Yeah, I think what I've learned is that there's much more sophistication out there than in the beginning. That's great. I think you can have much more meaningful conversations. Still, I see it with GROPYUS now, right? I mean, what do? We do hardcore tech. We have a company of 400 people. 200 of them are software engineers, machine learning guys, robotics guys. So it's very tough to find the right people to talk to in the venture world that really understand what we're doing. That's a little bit of a challenge. With Delivery Hero, it was easier, but still tough, because now I got even more no's, but with Delivery Hero, we got a lot of no thank you in terms of investments, but it was a little bit easier to grasp, I would say. And then when it took off, and when, Nicholas, managed it amazingly, and still does, so when it really took off, it was a little bit easier to raise funds at that point of time. And then also, say it again, internationally. So our most important tickets are in the beginning, but the ones that were the biggest ones, that were mostly US tickets later on.
And I guess, Jörg, for you, what are the key takeaways that you've kind of seen from your investments over the years? And what should newer VCs or new emerging managers need to consider or to focus on in order to get better outcomes?
Well, we invest as a public sector investor, so what's very important from our point of view is to really be present in the market in good times, but also in bad times. Market timing is difficult anyhow, because we don't have a crystal ball, but I think constantly investing in the market is very important. A second thing what is also very important is diversification. I think, venture capital or startups are a relatively volatile asset class, so the chance of making 10x or even more is there, but a chance of losing your capital is also there. So diversification really matters in that asset class. And a third thing, what's really important is information. The asset class is highly intransparent. So if you're new to the market, I think it's good advice is to really speak to people who are present for a long time. Also being around in circles like these, information transfer is very important, and to form your own mind. But from an investment perspective, I would say the safest way to enter the asset class is first, if you're a private investor, to do it via funds, because you get an you have a broader risk diversification, or do it via funds of funds, and then really pick your, specialize yourself, and then go deeper.
And for you, Markus, I guess what are the most exciting technologies for you at the moment, or industries where you believe the most innovation can happen, or what are the most needed strategies in order for these ideas to be financed? What are the biggest ideas that you're seeing right now that you're quite excited about?
I'm not starting with the typical AI stuff that's happening wherever it will go. I'm not 100% convinced yet that a lot of people will make a lot of money there, maybe just a few, but a lot of money. What I really like from my background, I did an engineering degree in biochemistry and genetics, so I like synthetic biology, super interesting. I like everything that engineers life a little bit in a way, right? So that's something that's going to be very interesting. And this whole very hype topic now of longevity is interesting, but more from a biochemistry perspective, right? How do you make your body be more efficient, or how do you get garbage and waste out and things like this by optimizing it, by maybe inventing tools, maybe it's nanobot somewhere. And so I really like that, because that will be transformational, right? So and that's something that is clearer, that is very important. With AI, we will see where it ends up. Nanobots could also kill us, but AI may be more likely if it's as successful as we wish.
And where do you see the biggest opportunities for both founders and investors to make true transformative impact?
From my perspective, that's why we started GROPYUS, right? That's one of the things. I think we have to solve really important societal problems. And for me, that was, when I looked back then, when we started GROPYUS, it was affordable, sustainable housing at scale. And that is a deep tech problem, right? Because otherwise it would have been solved already. People build houses for a long period of time. People build modular for a long period of time. But nobody solved it yet. If you look at the newspapers in Germany and almost every country in Europe, housing is always there, right? Sadly, there's Ukraine, there are other places, but it's housing. And so I think you have to do, in my opinion, one thing that's for sure is impactful, things that touch the physical world. Right? AI is one thing, right? But in the end, even AI will touch the physical world. Robotics and all those kind of things. And those, I think, like real hardware businesses is something that is very important to transform, because even if you do carbon capture, that's a really fucking big device that sucks out CO2 of the air, and it's expensive, and you have to engineer that, right? So where engineering meets software engineering, that's, I think, is very interesting for the real world.
Jörg, you look like you wanted to add something to that.
Well, I think this was pretty comprehensive, and also what Felix put up before. He had those, was it 14 sectors with trillions of numbers? So I think that's pretty much it. But I'm sure, AI will affect all the sectors which we've seen, and with AI we also see the energy infrastructure, which is very important. So I think those are great opportunities to invest.
And how do you see public funding playing a huge part in this innovation game, in these areas that you mentioned?
I think public funding is important. Public funding should always come in when private funding is not available. So public funding should not push out private investors. Should always be subsidiary to private capital. But there are certain areas where you need private funding. When I think, for example, of deep tech, when you have long investment cycles, when it's unclear whether there will be an investment success. Usually private sector investments, they favor short investment periods, high returns, and this is in certain areas where you need a lot of research and development, and where you have asset-heavy industries, which is difficult. So I think deep tech is a good way where public capital should, in a way of blended finance, be present. I'm not advocating that public sector capital should bear all the risks. I think I'm a great believer of pari passu financing, but blending private sector capital with public money, I think, is the way forward to tackle some of the challenges we face and to finance important technologies we need in the future.
Okay, last few questions. So back to you, Jörg. The VC ecosystem has grown massively over the last 10 years. It's no longer a small cost industry, it's huge. How do you see Europe, or from your perspective, remaining competitive, if at all, in the global VC ecosystem?
Well, that's a good question. I think it's a challenging question. We have a lot of challenges in Europe, but we are also quite well positioned. I think one of the challenges is the fragmented market which we have in Europe. I think overcoming this and especially creating a capital markets union is one of the, I can only say the German word, Gelingensbedingungen. Condition precedent is probably the right word in English. So we really need a strong capital markets union in order to attract large pools of capital for growth of important technologies. So this is very important. And I think in Europe we have, because we have very strong regulation, which is on the one side a burden, but there's an area where I see this strong regulation also creates a very positive effect. That's the whole impact and climate technology. I think when I look in Europe, we're way ahead with very many startups in that area, and I think those companies which are scrutinized by heavy regulation will have a competitive advantage to international players outside Europe because their products are more advanced.
Okay, I think that's all we have time for. They're waving at me frantically over there. So, thank you guys for coming on, and thank you guys for listening.